What's up, homies? So Tesla announced yesterday, Monday, March 28th, that it will put a stock split to a vote in its next shareholder meeting later this year. This makes Tesla among other blue chip companies that have plans for a stock split, like Amazon and Google's parent company Alphabet, with both exercising a 20-to-1 split later on this year. So, while the exact details of the proposed stock split are not entirely known, it's been reported that Tesla will also be issuing a stock dividend, where a certain percentage dividend will be paid to the shareholder in terms of stock. So, for example, if the dividend yield rate is 3% and you hold 100 Tesla shares, you would be entitled to 3 Tesla shares. And Tesla is just one of those companies that has given amazing returns to their investors. Along with strong EV sales that we can see from NIO and XPeng in China and the opening of their Berlin plant, it's just safe to say that Tesla is a company that you'd still want to bet money on. And since yesterday's announcement, the price of the stock has increased by 9%, and it's probably just going to keep on rising as we get closer to that shareholder meeting date. Looking at historical price graphs from Bloomberg, we can see that after the first stock split announced in 2020, the price of the stock increased significantly, but leveled off later on in the year. And we can see a similar trend starting off after the most recent split plan was announced. With that being said, there is also a research paper titled Market Reactions to Stock Splits, Experimental Evidence by Duffy, Robinall, and Rudd. And in their research paper, their conclusion was that in the short term, you would see a significant price increase of the stock in the short term, but in the long term, that price increase tended to taper off and would revert back to the regression line of the price increase or the general market price. And even in an environment where there's a lot of uncertainty, as well as after the huge price correction that we went through earlier this year, along with other market externalities, companies like Google, Amazon, and Tesla that just keep on pushing innovation are some of the companies that you'd want to include in your investment portfolio. So really, the main takeaways from this video is, in the short term, what we're all probably going to see is a price increase before the split. And once the split does happen, you're going to see a sell-off because some of the investors are going to want to take profit. And in the longer term, the stock will keep following its regression line of increase or just follow the market trend. But with Tesla, along with opening the Berlin plant and just the increased adoption of EVs, we're probably going to see significant returns from the stocks later on in the future. Again, thanks for watching. If you haven't liked the video, do press like and subscribe.